Hey guys, welcome back to the channel. So today we are going to talk about Capital A again. We talked about AirAsia X last week. Go check out that video. Now, as a disclaimer, we do not own any shares in Capital A, as well as Southern Steel, which is another company that we will be covering later in the video. So keep watching. So Capital A had a pretty nice run up this year. Overall, it's up 35%. However, that wasn't the high. It went from 65 cents to nearly $1.10. That would represent about a 70% increase. As you can see, it is down from the high. However, in the past couple of days, or at least the past 5 days once you watch this video, it is actually up quite a bit, 7%. Now, why is that the case? They recently announced that they would like to raise around $1 billion in the form of debt and equity.
Yeah.
From the US. Now, specifically, it will be done through this thing called a blank check company.
Yeah.
This company is Ethereum. I'm not sure how to pronounce.
Correct.
Acquisition, which is a special purpose acquisition company or a SPAC.
Yeah.
Right, something that was used for a lot of speculation in 2021. They target this to be completed through or by 2024. Now, this will also include the new businesses related to AirAsia. If you didn't know, AirAsia is not just, or Capital A is not just an airline company. It is also includes, your teleports, your logistics, big pay, a lot of other tech stuff as well. But that's more on the equity side. There will be the SPAC. But as far as that is concerned, they plan to raise out that $1 billion, $150 million from Bangkok Bank this month.
Yeah.
Which is really quick, actually.
Correct. And also, just want to highlight a little bit over here. Not only their existing business, but it also includes if, let's say, companies that wants to start their airline franchise, right? They can leverage on using AirAsia, this brand name, if they want to start out. And obviously, it's not for free lah. It's maybe some sort of like equity or maybe even loan that they need to pay AirAsia in order to use their brand name. So they are offering these kind of services on top of listing their other businesses.
Yeah. So as you said earlier on, it's 2024. Some history is that they are based in Hong Kong, but they are focused towards Southeast Asia.
Yeah. So this one is more of their previous fundraising in January 2022. So last time they raised about like 115 million USD from Hong Kong. If you're not mistaken, is Stanley. This Hong Kong investor actually participated in this private placement. That's why there's a temporary period where Capital A share price actually went up a little bit. And then they also wants to not only from this, they also managed to raise some of cash from other private investment in the public equity in the past. Yeah. And this is the now, which is the spec that they are trying to do in the US. So what's interesting is that they are very creative in terms of their financing and whatnot. So they are trying to plan a 400 million loan in the form of revenue bond. And this is going to be paid off to the airline ticket sales. I'm not sure what is the exact calculation of how they are going to do this one. But until they actually publicly release the calculation and announcement
of the oven.
Yes, correct. It's just like a talking only lah. It's like this is what they plan to do. I plan to raise in the spec. But obviously they're still in talks So it's not really a concrete thing that they're gonna be realizing this kind of fundraising yet. But yeah, anyway, just all talks, just trying to say that they have plans in mind to raise fund from the US.
Yes.
Yeah. And
so give you a sense the specs haven't really done that well. In fact, yes, trailed the indices. So on your right, you can see, compared to the Russell 2000, which is the S&P 500, but for smaller caps in the US, that's not done well, right?
Yes, exactly.
Whether it's IPOX spec or D-spec.
Yep.
And of course, as far as the frenzy is concerned, has pretty much died down, right?
Correct.
As a matter, because people lost a lot of money.
Yes, and I think also because in 2020 there's the QE lah. That's why once QE, there's a lot of these unicorn companies took this chance to raise money, and a lot of people got money to throw. So yeah, but then in the end the results is all pretty bad. Okay, so why this is no good, right? Is because after the buzz of the SPAC boom, a lot of investors start to take a lot of precautionary action, and they reject a lot of these kind of SPAC fundraising. So you can see that now there's an average redemption rate of 90%. They say that they don't want to do any this kind of deals like do mergers or fundraising from SPACs. Yeah, they're very against this kind of practice right now. And I think the US side of the SC, they also say that they want to tighten the regulation a little bit for SPAC. They don't want to just like simply say, you need to go through this, then you can just fundraise. Yeah. Technically in the IPO, you need to do a lot of steps, regulatory checkup before you can actually do this kind of fundraising. But now they are getting more and more strict on this. And this is another fact, which is about $1 billion. It's actually lost from the sponsor who wanted to list their company through SPAC. So you thought that they are actually making money, but in fact they are losing more money lah. If your deal is successful, then potentially you can make money.
Yeah, one of the clear, I mean, this is not us accusing Capital A of anything, but as a rule of thumb, as an investor, the way you finance things should be quite straightforward.
Yeah.
Right? It's either you just take a loan, or you do some sort of rights issue where you just dilute shareholders. Of course, these are a little bit more complicated steps, and certainly they may have their own reasoning for it. But every time a company starts to do a SPAC, it's time to be more cautious about what they are doing. That is my opinion.
Yeah. So the flip side, right, is because even if they do, okay, so before I go into AirAsia SPAC, right, there's a history that companies that list SPAC in the US, they are all cash flow negative. They all are loss making. That's the reason why they want, and they are actually growing their revenue quite a bit lah, and also their user growth. But that is the only reason that they want to list in SPAC, because they are not profitable. But in the case for Capital A, so what's pretty interesting is that they are making money and they are raising money from SPAC. So which is the opposite of what a normal SPAC company, a company who wants to go into SPAC would do. So this could actually like stir some interest in investors to pour money into Capital A because of their profitability and potential profit in the next few years due to the recovery of travel. So yeah, that is something that maybe you guys may want to ponder on.
So it's not always the case that a SPAC is bad.
Yeah.
You have to understand the proper context, and at the end of the day, it's a bet on the future, right? Whether you think that it will continue to go. So essentially, this will dilute shareholders.
Correct. Yeah.
So very simple. Whenever a company wants to dilute shareholders, you always have to ask, okay, what are they doing this for?
Yeah, correct.
What's the additional capital that they need for? That's the key. And whatever they need for, will it bring in more revenue than whatever you've been diluted?
Yes. And also keep in mind that they previously got a lot of debts that they need to pay also.
Yes.
So before even can get to the shareholders, they have to pay the debt first.
So our final comments would be, hey, look, why are they doing this at this timing, right? Is it just because they've had a certain profit so they can go around and tell investors, hey, look, I'm profitable? Or maybe they feel like it's not sustainable, but this is their window of opportunity to raise funds because of their numbers. Number two is definitely, shareholders will be diluted. This is not the first time this has happened with AirAsia. So you make your decision what that means. And of course, AirAsia X is in some sort of PN17 status.
Yeah, Capital A as well.
Yeah, Capital A as well.
So,
and because they want to do a merger and stuff like that, they need to be lifted from the PN70 status. Go watch our previous video on how the status has not been lifted for AirAsia X. So perhaps this is a way, that they can lift the that PN17 status. And of course, the last bit is this form of, exiting, right?
Yep.
Is this a form of Tony saying, hey, the airline business, I'm kind of tired, right? I'm year number 19, next year will be year number 20. I've given it a good run of, time to exit.
But also you need to take note that because they are trying to dispose of their aviation business to AAX, right? So that means that you are apparently listing your non-aviation business, which is your big app. Yeah. So if you look at the numbers, right, actually I won't say it's minuscule. It's not as good as their aviation business. So you need to know whether are investors interested in this big app and or their logistic business, all those
Indeed. Okay, so we go to Southern Steel now.
Yeah.
It was in the news because apparently a big shareholder decided to dump it.
Correct.
But somehow it's up 35% in just a couple of days. Year to date it's up 32, nearly 33%. And that big investor is Mr. Quek, right? Quek Leng Chan from Hong Leong. He is considering actually selling his majority stake in Southern Steel Berhad for as much as 944 million ringgit. That is a lot of money.
Correct.
Wow.
So I think at that point of time, Southern Steel is around like 450 million. So he is potentially projecting it to be 2x the value. Right. So and that actually stir up the retail investors. They say that confirm can go up one.
Right. So I mean, right now it's 400. Right now it's 450. So when it was announced, it was probably about 300.
Yes.
Like 300 something.
Correct.
So it's paying triple actually almost.
Yep, exactly.
So
this one is basically it's just all talks only. It's just what he thinks that the company is valued at. It could not be the same. It could not be valued as that much. That's why you need to do your due diligence on that company. And you need to know that this company has been very choppy in terms of their earnings. So there's always like a seasonal effect on it. So you can see that in 2017-18, they make money, but then after that, they lose money. So if let's say Mr. Quek thinks that this company is worth over 900 million, right? They should, in business or fundamental sense, they should make money about 90 to 200 million. So he is expecting that this business would make a turnaround lah. That is his own projection on that particular business. But so far, it has not been doing that well. Mm-hmm. So don't know, maybe he has some insider information that he thinks Southern Steel can make money. Yeah, who knows, right? I mean, so far there's no information regarding about this. Only they know. So yeah, you need to know that they have to make money in order to reach that kind of like valuation lah. And if you look at cash flow, also has been very bad lah. Basically, if you look at all steel business, they are all very choppy in terms of their cash flow. Working cap is always like fluctuating like mad. That's why it's
a commodity. Right?
Yeah,
there's nothing special
about
doing steel here. Yeah. Can you compete with the Chinese? Can you compete with all the different steel companies around? Yeah, I mean you can keep up with them, but you're not gonna outpace them.
Correct.
It's not like our our press metals or our OMH of this world, where they do have some sort of advantage.
Yeah.
I don't see it in Southern Steel.
Yeah, there's no moat lah. I mean, there's nothing to protect them. It's just follow supply demand of steel only. That's it. But then in latest, which is one day later,
hold up. No.
Southern Steel say that we don't have any this kind of agreement lah. So it's just saying that Mr. Tan Sri Quek is just his own opinion lah, and he's just telling it to the public. That's it. Yeah. I mean, just take it as a piece of short lah, sort of. Yeah, so it's actually nothing. There's no major deal that is going around in Southern Steel. Yeah, so this is the final comment. It's all in talks only. There's nothing concrete yet. And you need to know whether is this worth that much. I mean, it only worth that much if let's say they are making money and they are profitable and whatnot. And the third one is basically, I think this is something can draw parallels to Top Glove lah. I mean, back then Top Glove, when they buy back aggressively, right? In the media, Tan Sri Lim Wee-chai, he said that I think the company is undervalued. That's why he's buying it. But I mean, that is just back then. But if you look at now, their 1.4 billion of buyback is now worth 144 million. So it's a 10x reverse.
You know what would be really funny? If he keeps coming and say, yeah, I think I'm going to buy, and then he bids the price up, then he asks for a rights issue. Wouldn't that be funny?
Yeah, it'd be interesting. But
or at least something that I will laugh at. But anyways,
Yes.
So yeah, that sound still is very straightforward, nothing unique. Anyways, this is FIRL Pro. It's if you want this sort of analysis like more promptly by request, FIRL Pro is the program for you, right? We have Telegram groups where we discuss all this days before we launch the video. And there are a lot of cool insights there, right? If you want to shortcut your discovery process of finding good companies, FIRL Pro is a program for you. We write 15-minute reports or less twice a month for you to see, at least. If you want to get a sense of what these reports look like, head over to our free sample section, which you can find in the comments and description. And with that, this is the end of the video. I look forward to seeing you in the next one. Peace.